So this is part 10 of this multi-part video series. I hope you are liking this series. Some of my students and YouTube subscribers have said that they are absolutely loving this multi-part video series because a lot of students wanted to trade the weekly time frame charts because a lot of them do not have time to sit in front of their laptop or computer and check on a daily basis what's happening to their positions. So they wanted a broader macro perspective. So in this video series, I'm just discussing with you what I have learned from William O'Neill and Mark Minervini. Okay. And how they would have taken trades if they were in India. Thankfully, we do have Market Smith in India. So we have the resources based on which decisions could be made. Okay. This is an important video. This is part 10. This is a video about technical qualifiers. There is a difference between filtering and shortlisting. In filtering, what are we doing? We are just putting some basic criteria and we are getting a list of stocks. Okay. Let's say we get 100 stocks. That's filtering. From 5,000 stocks in India, we come down to roughly 100 stocks. That is the purpose of filtering. But then you have to go to the next step, which is shortlisting. So, how do you shortlist? You need some qualifiers, right? And we discussed in the previous two videos, we discussed some technical qualifiers. So, any stock that meets this six criteria, that we should consider that for our positional trading. So, out of 100, how many do you think will meet this criteria, all these six criteria? Most of those stocks would have already crossed the pivot point. So, this criteria would not get satisfied. Price should be given between the pivot and the 10-week SMA. I will not show you the chart because previous two videos we already discussed what this point is or what I mean by this. Most of those 100 stocks would have probably either broken the pivot on the upside or maybe on the downside, right? Doesn't make any sense to buy stocks which have already crossed the pivot or which have already broken the base. Anyways, the chances of stocks that have broken the low of their base, they will not show up in the filter itself. Okay. So the important thing is most of the stocks would have already gone beyond their pivot and they're still showing up in that filtered list. So we need to shortlist. We need to get rid of those stocks and only look at those stocks which meet this six criteria. There has to be a proper basing pattern, could be cup with handle, could be a cup without handle, flat base, double bottom, high tide flag, which is a very rare pattern, then ascending base, then there is only cup without handle, then there is saucer with handle, then I think there is saucer without the handle. Okay, there are multiple chart patterns, so which is clearly marked on the chart. So base pattern has to be there. The pivot point, the green dotted line has to be there. The blue shaded area, the buy range needs to be there. The red shaded area, the stop loss range must be there. The green shaded area, the selling range must be there. And this is the most important. Price should be between the pivot point and the 10-week SMA. Sometimes what happens is, the reason why I am putting this criteria here is sometimes the stock goes above the pivot point and then next week retraces in the buying zone. And then my students or my subscribers asked, now can I buy the stock because it has come back to the blue zone? No, you cannot buy the stock because you are buying a falling stock. You should be buying a rising stock, right? That's the breakout strategy. That is why I deliberately put this condition here to force you to discipline yourself. Okay, don't play around with stocks. If a stock has broken out and now it is coming down, maybe the breakout is failing. Okay, so you have to buy on a high volume breakout as the stock is pushing above the pivot point. So remember, unless these six criteria are not met, the stock will not be shortlisted. Okay, so you have to impose this criteria on that 100 stock filtered list. Okay, apart from this, I want you to become more strict with your criteria. If you read Mark Minervini's book, see, this is how to make money in stocks. this book. Then you have Mark Minervini trend template, trade like a stock market wizard, Mark Minervini. There is a slight difference in the percentages, but this is what I have finalized for this technical qualifying criteria. So the relative strength rating as per Market Smith should be more than or equal to 70. This is basically the trend template of Mark Minervini. The price should be above the 50-day. The 50-day should be above the 150-day, and 150-day should be above the 200-day simple moving average. So which means what? You After you shortlist the stocks based on those 6 criteria in the previous slide, if let's say you shortlist 10 stocks, go to the daily time frame chart of those 10 stocks to ensure that this criteria is met. Okay, it's okay if the slope of the 50 days uh, in sloping downwards, that's okay. But as long as the price is above all the 3 moving averages, we are doing fine. Okay, just check once. The reason why I say this is because recently, just last week, there was a stock. I cannot name the stock, but there was a stock where this criteria, all these 6 criteria was met. The stock was ready to be bought, but this criteria was not met. The 200-day was above the 150-day. So the red line was above the green line. And then the stock broke out actually on the weekly chart or daily, whatever. The stock broke out, and then the next day it collapsed 6%. Okay. So that is why I say be extremely strict with your criteria. Impose this as well. So this is not or this or this. No, this is and. You have to use O'Neill and this. So previous 6 plus this 4. 10 criteria you have to put to qualify the stock. These are technical qualifiers. Why all of this? Because Mark Minervini found out that 98% of all the leading stocks of the past were already in a confirmed stage 2 uptrend before even they began their full scale price advance. So this trend template is really a gift. It is truly a gift for the trading community across the whole world because he's already done that research. If retail investors in India simply understood these 4 points before buying stocks, okay, multiple thousands of crores of losses could have been avoided in the recent market downtrend, right? People simply held on to stocks trading below the 50-day simple moving average. It was not necessary. Okay, you would never find Mark Minervini buying a stock that is trading below the 50-day simple moving average. This is the basics. Okay, price should be within 25% of 52-week high. Price should be 25% above the 52-week low. Now in the filters, remember we did not put this criteria. So let's do that. Okay, just to simplify everything for you, let's create that filter again from scratch. I will do it quickly. I will not spend time discussing it because you already know it. But let's mark this William O'Neill. Okay, Market Smith ratings, you already know it has to be more than or equal to 70. This is Mark Minervini trend template criteria. This is A, B. Industry rank less than or equal to, 100. This you already know. Then market cap he doesn't use. Penny stocks we have to avoid. So greater than or equal to 20. Then average rupee volume more than 1 crore. Average daily volume we don't use. Price within 52-week high should be greater than or equal to minus 25. Then price versus 52-week low greater than or equal to 25. So this is the criteria that was missing. Then volume, daily price change not important. Price should be above the 50-day. Price should be above the 200-day. And then fundamental filters. Latest quarter sales growth should be minimum double digits. Latest quarter EPS growth should be 18. So see how simple this is. And I save this and I apply this. See this 76 stocks. This is called filtering. Okay, this is not shortlisting. This is called filtering. Now, out of these 76, we have to come down to those 10 or 15. Okay, from 5,300 stocks, we come down to 76, which is a basic filtering criteria. Even this doesn't guarantee that this criteria is met. Okay, Some of the stocks in the filter will not meet the criteria. So from 5,300, you come down to 76. From 76, you come down to maybe 5 or 10 stocks, which meet all of these 10 criteria. Once this happens, then you check the fundamentals of the company, and you already know what are the 12 fundamental criteria. So you see how strict we are. And believe me, there are stocks that meet all of the criteria, by the way. Okay, don't think that this is too restrictive or this is too strict. I have seen stocks where all these 10 criteria have met, and out of 12 fundamentals, 11 fundamental criteria are met. Okay, so don't worry, you will find those stocks. If you don't find those stocks, that means the market is not yet ready for positional trades. You don't have to trade entire year, every single day, every single week. The opportunity might come in short bursts of time. You might have to sit and do nothing for 2 months, but in the third month, you might get five stocks to buy. Okay, so it's like on an average, you are buying 2, 3 stocks in a month, which happened with me in November. I think, yeah, November or December, I bought 5 stocks in a single week, all positional trades. Okay, then 2, 3 months I did nothing because there's nothing to buy, right? But anyways, I can't discuss all of those things, not allowed as per SEBI regulations. But when the market is weak, you just sit on cash, relax, don't do anything. You were happy before the market downtrend. You are happy now sitting on cash. Put the money in TREPs or liquid funds, keep earning the dividends. Very simple. Okay. Don't make life complicated. Positional trading is like watching paint dry. Okay. It's very simple. So these are the technical qualifying criteria. So there is a difference between filtering and shortlisting. Filtering is very simple. I have just given you the filter. Okay. Shortlisting, I have given you the shortlisting criteria. These 10 plus the fundamental 12. When a stock meets all of these 10 plus those 12, I mean, that is an opportunity that cannot be missed. Of course, you have to do liquidity analysis, comparative analysis. Also within technical, notice that here I have not mentioned that blue dot. So is the relative strength line near the 52-week high? What is the count of the base? If all of this criteria is met, but if it is base number 7, I'm not going to buy the stock. Why should I take that risk? So base number 1 and 2 are investable bases. Base 3 is tradable base. Base 4 and 5 are late stage bases. Beyond 5, it's too risky to buy. So I'm saying too risky to buy. I'm not saying don't buy. Too risky to buy means if you want to buy, then either you go in with a small position size or you go in with your normal position size with a tight stop loss on the daily time frame chart. As simple as that. But anyways, this is part 10. I don't know whether this multi-part video series is over or not. It will continue because there is a lot to discuss. I have to discuss some charts and some more concepts. Okay. Before this series ends. Okay. Because a lot of students really wanted to learn this thing. Lot of students and subscribers, mainly subscribers. There are more subscribers than there are students. Okay. Mainly subscribers wanted to really learn positional trading and how people like William O'Neill and Mark Minervini would have approached the market in India if they were trading the Indian market. See, just because there is a pattern on the market Smith chart doesn't mean you have to buy. You have to impose some strict, your own criteria on the, you have to do your own thinking. You have to come up with your own inputs. Otherwise, Market Smith keeps publishing stock names to buy. You can't buy all of them. William O'Neill at any given point in time wouldn't hold like 5 or more than 5, 6 stocks in his portfolio. And if you look at Market Smith website, they give a whole host of stocks, right? So our job is to be selective, not buy everything that they say. We have to be very careful. We have to impose some additional strict criteria, which I think I have covered in detail in this video and previous 2, 3 videos. This video series will continue. It has not yet ended. Thank you so much.